What's up, traders? Matt from the Trade Brigade here with a Monday impromptu crypto session. We of course missed the Friday release date, and what better to do than cover this as crypto is literally falling out of the sky. We can use a nice clickbaity title, get the people fired up. In all seriousness, what we will do is a technical analysis on all of the coins that you see listed up above. Kicking us off is none other than our Bitcoin daily time frame chart. What do we see in terms of price action in front of us on the screen here? Remember that in last week's video, not this past Friday, but the Friday before that, we were discussing the possibility of a breakout from this range. If we were to take out this level around $21,600 per coin, we should expect a move to the resistance trendline. Now that did happen, and we even went a little bit further than that. But notice now, the pullback has gotten so aggressive that we've actually failed back down underneath $21,600 per coin. So what does that mean? Well, to me, it means that the overall trend of crypto and Bitcoin, because that's the chart we're essentially on here, still remains firmly to the downside, right? If we were to go to a weekly time frame chart, I mean, you can see this clear as day. We really haven't done anything impressive. Sure, there was a small rally here to the trend line, but did it even come close to changing the weekly trend? Absolutely not, right? We would have had to make an equal high up towards this area in here, or a significant higher low pullback. And right now, we don't really have that, right? If we go back down to the daily time frame chart, pop that on auto. Instead, all we have is a move to the resistance trend line. Sure, in the short term, I'll definitely give it to you. We have a higher low here and a higher high from here to here. But the fact that we've now closed this bar back down underneath starts to trigger, in my estimation, really the outlook that I have here, is a look above and fail. And on a look above and fail, we know that the target should be the bottom end of the range. Now, where does that take us? Back down to $18,600 per coin. Now, if we were to get here, based on the 100% retracement phenomenon, I would not expect an immediate breakdown on the first test. I would expect some sort of bounce if it produces then a lower high inside of this range that we've just outlined. So from here to here, a lower high, then the equal low reattempt at the bottom end of the range is the next short setup to continue the breakdown here inside of Bitcoin. So is Bitcoin sort of falling out of the sky, as I so bluntly put it earlier on in today's video? Kind of. It's falling out of the sky in the sense that we're back down underneath the breakout point, indicating a failed move from the buyers at the trend line. So if the buyers evaporate and the sellers step back up, then kind of back on down to the bottom end of the range that we just outlined here. Now, one theory that's floating around out there, and the reason for this sort of pullback, so to speak, is that people are de-risking for the Fed announcement come Wednesday. Not necessarily sure that I buy that completely. And instead, I would just really focus on this range and the look above and fail pattern that is currently in play. Can we make it all the way down to $18,600 per coin is step number one. Can we produce a lower high dead cat bounce? That is step number two. And then step number three is if we cross back down underneath 18,600, it is a game on for shorts to target $16,250 per coin. That would also be a very clean range double, right? The range double would even take you a little bit further. So a slightly conservative target on the downside move if we get that scenario that we've just outlined. If we get something that's different and we do produce a higher low here on the daily time frame, that is a bullish implication, but I would not get tangled up in trying to buy that higher low pullback. Instead, I would want to see what the next reaction is back up at this equal set of highs around $23,000 per coin. If we can get back above it, okay, maybe there's a little bit of upward lift and we can classify this as a stronger bottom inside of Bitcoin. But until that happens, I am not convinced. I am not convinced inside of Bitcoin, primarily because of this weekly chart that we just sort of outlined here is just still so glaringly bearish, right? In the weekly sense, this is really nothing more than a nasty bear flag, right? I'm not really seeing anything bullish on the weekly time frame just yet. Anyways, continuing on to Ethereum. Let's go to the daily time frame chart here. There are some interesting nuances. Ethereum had a trend line that was much, much further away. And sure, we did hit the trend line, but here's a key difference. If Bitcoin does not rotate all the way to the bottom end of its daily range, that would be the equivalent of down here, then I would watch for the higher low pullback to respect the top end of the range here inside of Ethereum, around 1250. If that were to be the case, then that would be a great pullback entry if that's coinciding with a Bitcoin bounce off the bottom end of its range, okay? So let me just quickly flip back and illustrate this. If Bitcoin Bitcoin does make the move here and bounces because we have that 100% retracement phenomenon, and Ethereum at the same time is pulling back to here, I would look for the buy in Ethereum before I looked for the buy inside of Bitcoin. Hopefully that makes sense from a relative strength perspective, but also just from a structural perspective, how we're using this prior resistance as technically newfound support if the pullback makes it there in the first place. The other thing we can say about Ethereum is that if you're not quite convinced on longs, you would look at this as a micro range, right? And we're breaking down from that range. So if you want to be bullish, price needs to recapture the low end of the range, right? This needs to be a trap for the bears. Bear trap here, if we're back above 1,500, we'll just round up there. Call it $1,500 per coin, then fine. Bear trap engaged. This sucked in some shorts. They're going to have to close out. That's buying pressure. Maybe it turns into a bull flag that looks like this, and then eventually it's a long over the top, right? So that's the scenario for the bull side, or the pullback continues into here, and that's where we're re-interested in potentially buying the pullback at 1250. So those are the scenarios and sort of outcomes for Ethereum. I would just remind you that the weekly trend as well is still firmly to the downside with a little bit more of a significant lift here, but it's not like we've recaptured any crazy pivots, right? If we take out the Fibonacci's from high to low, we are still firmly underneath your 38.2, which technically marks bear flag consolidation territory in the grand scheme, building out something that looks like this, right? So I just wanted to provide that as a reminder and some context as well. Binance Coin, we'll stick to daily charts from here on out. You can see that we had this ascending triangle. We broke out, and now we're back testing. So it's do or die time right now in Binance Coin. If we can remain above this 243 level, fantastic. Bear trap as long as we rebound back above that 258 level, and then it's all about the resistance trend line. So what I would want to see for longs here is to confirm this as a bear trap, suck in that liquidity. Those people will have to close out eventually. I don't know where their stop is going to be exactly, but if they do stop out, then that's going to be the fuel that moves us up and over the big resistance trend line here, the dotted line, to get into some of these next overhead targets. And just as a reminder, there's where your resistance trend line is coming from. Anchor, touch 1, touch 2. We have not tested it in quite some time. This is kind of getting close, which is why, again, there's probably not a long in this area. It's just got to be a break of that trend line to get us into 285, and then after that, 311. All right, so that's the bull case here inside of Binance Coin. If we do see a breakdown underneath 243, I would not want to play around in this chop zone. Instead, maybe the move is more similar to Bitcoin and we see a look above and fail. The move is here to 207, lower high dead cat bounce, equal low in short proximity of time. That opens up the door for lower. Sorry about that tonight. But here, I would not necessarily be scouting for a new short. Maybe on a break of the trend line. But even that is a little bit risky, right? Where do you put your stop? Ideally, it would just be right overhead above 243, right? So that's Binance Coin. Next up, ADA, Cardano. What's going on in Cardano? Still being the relative weakness monster? Absolutely is. So here's this kind of range, double top off the top, and sort of breaking underneath the neckline. I would just look for the lows, honestly, inside of Cardano. This does not strike me as a chart that we are interested in. You should not be looking for longs here. You should not be looking for shorts here. This is simply one of those things that you stay away from because it's just so darn sideways. There's nothing to do here. And the range is so small, right? We're talking about something that's sub 50 cents that can hardly move 10 cents over the course of a week. There's just nothing to do in Cardano, so I would stay far away from that one. Next up, Solana. Deeper pullback into the trend line. Does it hold here is the question because this made a new higher high. I would say I would look for reversals off of this area. If we see a hammer candle print around here, long over the highs, retarget this area right around in there, around 42 would be the target coming from prior support, which then clearly flipped to resistance. And also if you do something like that, it was resistant from there and there as well. So 42 is your upside target on the instance where we see a hammer candle off the trend line, take out the highs, boom. That's kind of the first target, and then monitor for continuation. But please do be conservative in an overall bear market in the crypto space. So that's what I've got inside of Solana. To the downside, just like we talked about in Binance Coin, if we break the trend line, there could be a short here to fill up the triangle, quote unquote, fill up the triangle. The triangle, if you're asking, is this level right here. And then after that, it's this level right here, right? So that's kind of how that works. If you break trend, you expect the first equal low. And then if you break that, what does that tell you? Everybody who got in on the reversal here and then here is now completely underwater. If those people sell, you should expect the next low, which would be here, right? So just use these as literal, like targets and, signposts along the way. Next up, last but not least, MATIC USD, excuse me. This was on our watch because of the strong breakout from in here, and it still looks great on the pullback. It looks good on the pullback. Notice how the buying was just so overwhelming, and this pullback is really more sideways and neutral. Don't get me wrong, this is still a pretty aggressive bar to the downside, but it pales in comparison to what we've seen on the upside here, which is why this one continues to make the cut. So I like what I'm seeing in MATIC. Can we support above 74 cents is the critical question. If we do, great. It's game on, clear higher low. This one's been in a daily uptrend for quite some time now, which is fantastic. Fantastic. So MATIC definitely has the relative strength baton right now. Can it hold 74 cents is the question you need to ask and answer into the upcoming week's worth of trade here. For this to be a bear trap, again, you want to see price acceptance above the lows. It's going to be right here, around 83 cents. So 10 cents worth of lift triggers a bear trap. These people will likely close out if they're trying to short it here, and then a break of this trend line gets you up towards the top. That's a little bit granular for the scope of today's video, but that's ultimately how that could pan out to the upside. A break of $1, so looking for trend continuation. So say we do the whole bear trap thing, we do this, and then we break $1. Where's your next target? Boom, right there. Very obvious. Crypto's fantastic because it trades, around these levels so cleanly, right? We had this level around $1 mapped out. It went right to it for all intents and purposes. So next target on the break of $1 is 17 cents, which is a 17% return if you want to take a position at $1 for the break there to the next target. Pretty lucrative here inside of MATIC. 17% is great. Obviously, the crypto space has warped everybody's minds into believing that you need to be making 3,000% per trade, otherwise it's a bad trade. That's not the case. 17% will make you a very, very wealthy individual if you can do it over and over and over again without incurring too much of a loss on the downside. Anyways, that's besides the point. That has been the Monday night crypto update. If you appreciated the update and me following up here instead of just skipping out on crypto for the week entirely, let me know down below in the comments section. Usually these videos get a fraction of the views that we would see otherwise. But again, this is really more so for me in keeping an eye on the crypto market, and I do like to share the thoughts with you guys as well, which is why I put it out there into the world. So if you liked it, give the video a thumbs up. If you didn't like it, give it a thumbs up anyways. Hope to hear something nice from you in the comments. If you've got any feedback, coins you want me to check out, drop it down there as well. And with that being said, I wish you all a great trading week.